All right, we are live. What is going on, everybody? When you get on the chat, let me know if you can see and hear me all right. Make sure my tech is working. Today we got some decent bullish action in the markets. Couple of recent news items that are worth mentioning. Number one, we got some action out of the White House to deregulate the auto industry a bit. And man, people are blowing it out of proportion. I'm seeing so many people think that this means that we're gonna be getting like Land Cruiser 70 series and all sorts of cars that people have wanted from around the world for a long time. Um, and it's not going to do anything of the sort. It's a slight rollback in some gas mileage stuff. It's really not going like all those. The Hilux was already come into the U.S. By the way, I'm pretty sure like a couple of months ago, I saw. I'm fairly certain. I could be wrong about this, but I'm pretty sure they already announced plans to bring the Hilux here. Anyway, there are trucks and cars that are available around the world that are super cheap, and people think this recent executive action is gonna bring those to the states, and that's not true because it's not just the recent CAFE standards that need to be repealed for us to be able to have a free market in vehicles. There's the chicken tax. There's all sorts of national safety standards that would need to be just completely repealed or rolled back to like at least to that prior to 2007. Um, and in terms of like what the rules were back then for those things to come here. So a lot of those vehicles are much cheaper because they're basically just stripped down. They're just vehicles. They just drive and get you from point A to point B. So they don't have like the side curtain airbags. They don't have a lot of them like a lot of them. I don't think have the anti-lock brake systems and the automatic braking. If it's going to hit a pedestrian or like the radar systems, that kind of thing. And none of that at this point has changed. And then especially like taxes and the tariffs on bringing those things in. So the idea that what happened that the last couple of or yesterday would bring in, we'd be able to buy, $5,000 to $10,000 cars here again. It's just not going to happen. It's not reality. Now it's a step in the right direction, obviously, repealing government intervention in telling consumers and producers what they can and cannot do. But it's not nearly as drastic as a lot of people think. Um, the next thing that's happened recently is the jobs. So um, on the recent uh, layoffs. The announcement came from this was a private data collection organization. So this was not official government numbers, but layoffs are now year to date at the highest they've been since 2020. It's the first time we've had a year with over 1.1 million layoffs since 2020. But at the same time, initial jobless claims are continuing to plummet. We just hit a new 3-year low, and it's been heading down. So we've got these two seemingly conflicting pieces of data about the jobs market, whether it's like really bad or really good. And there are a couple of reasons why I think the data is conflicted here. So number one, um, the layoffs so far, a lot of them are announcements. And so the data collection company here, what they do is they report layoffs that have been announced, but not necessarily yet like completed. And so that's one piece of it. Whereas initial jobless claims are like, what are the claims that are coming in right now? So there's a bit of a lag there on if and when those layoffs actually do get completed, how long it takes those people to file for unemployment benefits. The second thing is the types of people who are getting laid off may not ever apply for that because maybe they're not eligible, maybe they got severance, maybe they got a new job, and so depending on who it is that is being laid off, that may not show up in the jobless claims. The other piece is immigration. So if a lot of the layoffs are happening from, I don't know if that would be if that would count in layoffs. Um, but I guess it's possible that the deportations are contributing to the layoffs there, which then that again would not show up in initial jobless claims because they're gone, so they're not filing. Um, so that seems to be the big discrepancy between those pieces of data. Um, but we'll have to keep on watching to see what happens there. All right, guys, start throwing in some questions in the chat for me. Q&A, ask me anything. Pin that. TLT looks interesting with what's going around in global bond markets and US liquidity stress. So, TLT, by the way, if you guys see these, stuff sticking out of my ear, those are earplugs. I've got some big construction noise outside, so I'm trying to block that out so I don't get distracted. So if you see that sticking out of my ears, that's what that is. Um, uh, it I think the expectation that long-term rates are going to go down is maybe not going to come to fruition, because right now what we've seen is the yield curve steepening as short-term rates go down. So if we do get like Hassett or somebody in to replace Powell and a couple other new people at the Fed, and they push rates down, inflation concerns could absolutely push long-term rates higher. So we would need something like, in that case, we would need something like yield curve control. And so it's possible that there's not going to be the big move up in long-term bond prices that many people are expecting. It's kind of what you saw during the 40s through the 80s, which was higher inflation expectations, yield curve control for a period of time, but that's just on the government's end. Interest rates for everybody else moved higher. So I think we're in a period of time that will look much more close to that, because the government needs to deleverage itself relative to the size of the economy, and they do that through pumping new money in. However, it is possible that that TLT, and long-term bond prices do go up, at least temporarily, before the bond market starts to price in that higher future inflation. Favorite Cooper ETF? I'm pretty sure that you meant copper. Right now I'm long COPX. It's a copper miners ETF. Let's see here. Klarna. I don't know much about the fundamentals of Klarna. I'm not really super interested in Klarna's buy now, pay later, right? Klarna. It's one of those that shows up when you're checking out online. It says make 4 easy payments for this and stuff. So, I'm not. It generally tends to be the absolute worst borrowers who take advantage of those kind of things, and so it seems to me like you would have the highest risk of default if you have a K-shaped economy and the bottom end is struggling. Like, that would be the first thing that they default on. Now, I recently had had puts on a firm. I think, let me just make sure, because I don't think I currently have a position, but I'm making sure. I don't want to give any inaccurate information about this. No, I still do. I still do have some puts. Very small position, but I'm considering closing them out because I actually recently spoke to somebody who worked there, and that I mean it was not like anybody important. This wasn't like insider information or anything, but from their perspective, the company was doing extremely well, and and typically the way that they make the most, because they don't charge interest, most of these don't. Uh, the way that they make their money is just a fee from the merchant. So if I want to use Klarna as a payment processor, then I'm going to pay them like 3% if the transaction goes through them. And so that's how they make their money. They don't charge anything on the actual loan. But again, low margin business seems like something that could blow up in the face of you know widespread defaults. JP Morgan is working overtime on the silver slams. Maybe, but to the extent that manipulation happens, that just gives you the opportunity to buy at a price that is lower than what the real value is. So I personally don't know why anybody ever cares about manipulation and price slamming and spoofing and all that, because it's just an opportunity to buy in at a cheaper price. Um, do I think the price of silver is at a good entry point right now? I don't. I don't have a position on, or a trading position, I should say, on gold or silver right now. I've got my long-term holdings of the metals, but in terms of trading, I don't. I'm not looking at either one for a good as at a long or short as a good entry right now, because they are both super incredibly overextended and overbought. Um, and that can last a lot longer than most people think, especially in like things like short squeezes. And um, the last time gold was as overbought as it is right now, in like a monthly chart, was 1980, right before the big, that at the end of the giant bubble. Um, and so I think that the my base case for gold and silver is volatility and sideways price action, um, for at least the near future. Gold tends to front run monetary policy, and now we're seeing that monetary policy start. Gold has probably already made the majority of its move. This is not real gold in my background. That is plastic. It's a prop from Amazon. That would be like, I don't know, I think like $20 million worth of gold. That would be very unsafe. Um, and because, like, I'm a person who advocates gold ownership, I personally don't keep any physical gold at home, because I think that would be unsafe. Somebody who's like, oh, I think in this day and age, it's too easy to find out where people live. Um, and so I have a lot of lead and no gold at home, I should say. All right. Is the market rally rotating, or are junk stocks just bouncing? I don't know. I think it would depend on what you mean by junk stocks. Um, you'd have to clarify that. All right, let's see here. I know it's asked every time, and he's nice enough to answer, but he should start the Q&A with that question at this point. Yeah, it's funny. That question does come up on pretty much every live stream. But I honestly, I know that it bothers you guys sometimes if you hear me answer the same question. I don't ever mind answering the same question over and over, because that's just an indication that that's what people are interested in learning. And there's constantly a rolling over, like, new people who are getting into something for the first time and have not learned about something yet. And so what tends to happen is you get the same kind of questions over and over and over again. It's just like, well, that's what people need to know about. So do you believe small caps like the Russell 2000 will have a big surge like they did last time the Fed QE'd? I am very bullish on small caps. I would say over the long term, like the next 3 to 5 years. Jerome Powell isn't gone yet. He will have his Volcker moment and raise rates. I mean, that's a contrarian take right there, man. I don't know. That would be kind of crazy. I think, I mean, he's gone pretty soon. Um, if he's able to get the FOMC to vote to raise rates before he leaves, man, that would be crazy. I would be absolutely shocked if that happened. And I think the entire market would be shocked as well. When will the Japanese currency market settle down? It's causing the USD to go up. Um, I think probably maybe not for a long time. They're finally starting to pay the piper for all of the all the QE that they've done for the past couple of decades. Um, MACD on SPY show the market turning if you look at it from all-time high time frame. Um, yeah, I don't know. I can't. I haven't switched over to using a software like OBS yet for my streams. I'm still just streaming through Chrome. And every time I share my screen, it glitches out and stops stops the stream and freezes. So I don't want to do that. I don't want to risk that again. I could take a look at that. Depending the way that you phrased it, kind of makes me think that maybe it's just a product of the time frame that you're looking at, and maybe that's not really indicative of what is going to happen within the next couple of years. But we'll see. Let's see. Next question. If inflation and rates are going up in the next 40 years, how will that affect real estate prices? Inflation pushes prices up, higher rates pushes prices down. It will completely depend on what happens with demographics. So the thing that most people miss about housing is the number of people who need a place to live versus the places that there are to live, and the building has not kept up with population really since about, I don't know, 2009, 2010. There were a couple of years where there was absolutely no building, and it's never gotten back up. And whenever I say that, a lot of people will pull up like a basic chart of total housing units per capita. The problem with that is that the long-term trend is that the number of people living in a unit has been on the constant decline for decades. So, like, to push it to the extreme, like your grandparents grew up in a 900 square foot house with 7 children. And so the average number of people per housing unit used to be extremely high. So we've had population growth, but we also have a steep drop off. Now the average number of people living per unit is like 1.5 or 2, depending on the city. And meanwhile, we've had less and less and less building of those as well. And so that's going to be the primary driving force there. What is, I think, most likely to happen given demographics, the lack of meaningful change in regulation about how governments prevent building, like zoning laws and building codes, that prevents building in many cities and states for enough to compensate for population growth. And then you have this subsidizing of purchasing power through federal, backing of loans and 50-year mortgages and grants and all those kind of things. Those all artificially increase the amount that people can afford on their monthly payments. And so that keeps prices high. I don't see any realistic or probable scenario in the next, at least 10 years, maybe more, where any part of any of that will change. Then the other piece is interest rates going up from inflation, makes that more unaffordable, but it's only more unaffordable for mostly for new entrants. And so it seems like the most likely scenario that unfolds over the next 10 to 20 years is that anybody who is able to get in on real estate in any way, shape, or form will be in the game and can ride that wave up and will be able to, buy more and take advantage of owning real estate and become landlords. Everybody else who didn't already get in will soon be priced out of being able to buy and will just be stuck as renters. So that seems like the most likely scenario to me. We'd need meaningful changes on all those other things that I mentioned for the current direction towards that to change. Your outlook on how the midterm will impact the next year, as historically the market underperforms. Time for dividend stocks for the next 12 months. 11% compounded annual growth rate sounds better than negative 0.3%. Well, first of all, dividend stocks typically are not paying 11%. There's a couple, and usually they're on the verge of cutting their dividend, or they're not paying dividends from business activity. They're paying their dividends as a result of raising new money from new investors, which is or they're doing, it's a structured financial product. They're selling calls. It's an ETF or something, and again, those are going to underperform the underlying, and so your total return is going to be less than whatever they're selling calls on. There's nothing wrong with setting up a dividend portfolio. I think you get 10 good names of a couple ETFs and a couple high dividend stocks, and you can do 5, 6, 7% overall in the dividend portfolio. The assumption though that you have built in there is that the markets are going to go down, and it's like that's a pretty widespread assumption right now. And the issue with that is that markets don't die of old age. Markets die of euphoria. There's almost no euphoria right now. In fact, Charles Schwab, CEO, yesterday put out a statement saying that the number one question they're getting from their clients right now is how to protect their gains, since the market is at all-time highs. It's like, generally, if people are worried about losing money, that is not a sign of the market being at a top. That's a sign of worry, and markets climb walls of worry. So the other thing is when the Fed starts cutting rates while the market is at all-time highs, the next 6 months, year, 2 years, markets are up the vast majority of the time. But I mean, we'll see. Nothing wrong with dividends. The thumbnail that YouTube automatically generated for the stream is hilarious. Yeah, I don't know. They need to work on their picture selection for the live streams. I know there's a way to manually choose the thumbnail, but I'm not worried about it. Maybe the goofy face I was making for whatever snapshot they chose will get more people to click. Silver is barely above its all-time high. Come on, it's not overbought. It depends on what you mean by overbought. When you look at like traditional metrics of how you measure overbought, like RSI on a long-term chart, it's like it's overbought. Just because something is something being near or at its all-time high has nothing to do with it being overbought. The two are entirely unrelated. Favorite silver ETF. I do like just for trading, you can't beat SLV because of the liquidity. If you're going to hold it, you're just going to hold the shares, probably the Sprott physical silver ETF. And I can't remember is it PHY? No, PHYS, I think, is their gold one. But I think they have a silver one. I can't remember the symbol. How far out into the future do you usually buy puts or calls? It depends on the time frame that I'm trying to trade within. So a couple of weeks ago, I bought a put and a call on NVIDIA to play earnings, and that was, they were expiring 3 days from then, or 2 days from then. And then sometimes I'm buying calls or puts that are expiring in December of 2028. So what is that, like 3 years? Maybe they don't have, maybe it was June of 2028. I don't know the farthest out ones yet, but it just depends on the time frame. If I'm looking at a trade, looking at an investment that I want to hedge, it just entirely depends on the context. There's no there's no right or wrong answer to that. It just depends on the context of the investment or the trade. Hilux is not coming to the USA. You can't buy it anywhere, and they pulled most of their marketing about it. Even if it does come, it's not the same vehicle sold overseas. Okay. I thought I saw a couple of months ago that they announced that they were going to be bringing a version of the Hilux here to compete with the Ford, not the Ranger, I think the Maverick, to compete with the Maverick, I thought. But yeah, maybe they decided that they weren't going to be able to do that for some reason. Talk about what is going to happen in July of 2026 to celebrate the 250th anniversary of the US Revolution. I don't know. I mean, I'm sure a lot of people are going to be partying. I think Trump will probably have some sort of announcements that he'll be saving until then for some things he's going to want to do. I don't know. Have we hit the floor on Bitcoin? Is it going up from here? I made a Bitcoin video yesterday. I think the chances that Bitcoin has bottomed are pretty good. It seems like the biggest thing that was causing some big dumping was trying to see if they could turn MicroStrategy into a forced seller, because then that could make Bitcoin and MicroStrategy just dump to the floor like hard. But with the cash, the USD cash reserve that they have now, I think it's probably not going to be able to get them to turn into a forced seller. So I think I think there's a good chance the bottom is in, but I don't know. It could definitely go a lot lower. Just a comment again, silver is barely above its all-time high. No way it's overbought. Okay, here's what I want you to do since you commented this again. Explain to me why something being at its all-time high or near it or not has anything to do with overbought or oversold, because the two have zero to do with each other. They are not related whatsoever. And if you think they are, explain it. All right. That has to do with the baby boomers living in these big houses alone. Okay. This is something that I really, really dislike. It's like all of these people, especially I think young people on the right, have this huge hatred towards boomers because which is just, whether they know it or not, it's completely contrary to what they say their free market views are. It's like there's this person, regardless of their age, who worked, saved, bought, and now they own property. And by property, I mean, like, if you own a computer or an iPhone, that's your property. If you own a car, that's your property. If you own an RV, that's your property. If you own a water bottle, that's your property. If you own a house, that's your property. So that property just means things that you own that belong to you. What right do you have to tell somebody they don't deserve to do what they want with something they own? No right. It belongs to them. Who cares? It is nothing to do with you. There is no moral standing to tell somebody because of their age that they are not allowed to do what they want with what belongs to them. Does it matter that there are 4 bedrooms and there's only 2 of them in the house? No, it's theirs. If somebody buys a truck and puts a lift on it and puts big tires on it because they think it looks cool, and they use that truck to drive to the gym and drive to the grocery store, and they enjoy driving that, and they enjoy spending all of that money in order to make their truck look cool so they can feel like they're enjoying and having fun driving around town. What is that to you? Who cares? People want a pavement princess. Fine. Guess what? It's giving the mechanics and the people who install lifts and the people who make tires, giving them jobs. So what is that to you if somebody wants to do that with their own money? Nothing. Now, the thing that the frustration people are expressing, they're just aiming it in the wrong direction, is the government policies that have prevented affordable housing from being built. So then they look at the haves and they get angry at the haves, not knowing that they're misplacing their anger and their frustration in the wrong direction. It's not the fault of the people who have. It's the fault of the people who are using their monopoly on violence to prevent private businesses from making affordable homes. It is entirely possible to build abundant, affordable housing anywhere in the nation. It is law and regulation that prevents it. End of story. So it has nothing to do with an old person who won't move and give up their house. You have no moral right to tell somebody they should give up what's theirs so you can take it from them. It's communism. It's worse. It's 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 the desire to force communal theft through voting or through majority will. It's terrible. The problem is the government, not the boomers. And yeah, I know most people who are in government power are boomers, but it's not boomers' fault. It's the people who are in power. It's their fault. All right. Do you think they'll raise minimum wage to unstick the housing market? No. They might raise the minimum wage, but not for that reason. What are your best and worst stocks that you've bought? The worst, well, I mean, yeah, this is probably the worst stock that I bought was Radio Shack. It was the first stock I bought. After I saw the Super Bowl ad, this was before I became a stockbroker. There was a Super Bowl ad for Radio Shack. I believe it was, I can't remember the year. It was probably 2013. It was Ravens. I believe it was the Super Bowl where the lights went out during the game. Anyway, there was a Super Bowl ad for Radio Shack. I think it was during that game that year. And they were like, "Oh, it's not your grandpa's Radio Shack anymore. We're turning it around. We're, coming back." And I looked at the chart of their stock and it was like, "Oh man, they're at $20. They used to be at $200." I was like, even if they get like halfway back up, like that's a great return. So I bought the stereotypical uneducated investors analysis of of investing. So I bought their shares, and a couple years later, the stock was bankrupt, and I lost it all. Best is at this point probably IREN, IREN. Bought that. I don't know, up 2,000% or so because I'm using options. So I think so far that's probably the best. All right, let's see. If minimum wage was $50 an hour, it would unstick the housing market. No, because that would just cause mass unemployment. Because all you're doing with a high minimum wage is you're outlawing people from working if they have skills that are worth less than $50 an hour. So there are tons of people today who their skill level is only worth $30 per hour to an employer. And what that means is if I'm going to hire somebody, the only way as a business I'm going to engage in any business activity is if I can get a positive return on that, or if I believe I will get a positive return on that. So if I'm going to pay somebody $30 an hour, they need to be able to produce like $60 or $70 an hour for the business. I'm going to hire somebody at 50 grand a year or 100 grand a year. They're going to need to be able to, on paper, I need to see that they're going to bring in more than what it's costing me. Otherwise, businesses would not be able to stay in business. You're just losing money. And so you have to be able to make more money from your business activity than what you're spending that money on. And there is no difference between labor, buying labor and buying raw materials and buying, parts to, create products. It's all you're buying things, putting them together, and selling the package for more. So if the minimum wage is $50 an hour, then I can't hire anybody unless I pay them $50 an hour, which means I can only hire people who will be able to make me $100 per hour. And that means that if somebody only has the skill level where they're able to produce $40 per hour for my business, I cannot hire them. I will go out of business. And so minimum wage laws, the only thing they do is they remove the bottom rungs of the ladder. And it makes it illegal to work if you are not already skilled. Man, I lost my place. Where? Okay, there we are. In your real estate investments, are you personally involved in repairs and maintenance of your properties? No, I've never even seen my properties. Um, there's a minimum threshold where my property manager will just take care of anything if it's below a minimum threshold. And if it's above that, then I get an email and say, like this last one, it was like, hey, we need to replace the carpets. It's going to be $650. Approve or deny. So I approved, and they replaced the carpets. And that's the extent of my involvement. You have to get a good property manager for that, though, that you trust, and you have to make sure you're watching the books. Do you know of any inflation protected investments that are not exposed to the S&P directly? Precious metals, yeah, gold would be one. Uh, I think Bitcoin fits in that category. Real estate fits in that category. Obviously, things that are like TIPS, which is a Treasury inflation protected security. I don't like that, but technically that's an inflation protected investment that is not exposed to the S&P. Would you do interviews with other YouTubers? Yeah. I used to do it a lot more. Even now, I'll occasionally do it. I just don't like interviewing people on my channel because I like to prepare so that I'm asking them questions that will create good answers that I know people will want to hear about. But what that ends up doing is I know what they're going to say to all of my questions, and so I'm very, very bored the entire conversation. Um, and I have not developed the skill of just being able to sit down and have a really good conversation with somebody that is kind of like impromptu and unplanned. So for that reason, I'm not a good I don't think I'm a good interviewer. I don't like doing it either. But I do like being interviewed. I actually like it a lot. So pretty much anytime anybody asks me to for them to interview me on their channel, regardless of the size of their channel, even if they're brand new, pretty much every time I've always said yes. Have you changed your mind on this? Gold-backed currency companies should be using databases instead of blockchains because it's unnecessary overhead. No, I have not changed my mind on that at all. It increases cost, decreases efficiency, and does nothing to deal with the only thing that actually matters, which is trust and verification that the metal is actually there. Blockchain does not solve that at all. It adds an unnecessary, inefficient, costly layer. Is slow mode on because I'm here? Yeah, probably is. I wonder. Oh, slow mode on the chat. Yeah, I don't want you blowing up my chat with all of your comments, Ninja. No, just kidding. I've heard that you should put slow mode on because some people will get on there and they'll just do comment after comment after comment and blow it up, and then it like messes. It makes the chat difficult for people to interact with. I don't know if that's true. Maybe I should not do slow mode. Let me know in the chat, guys. Do you think slow mode, the 5-second delay that I have put on, is that something that makes the chat worse or better? Why is Amazon price action so lost? All the good news and expansion headlines don't move it at all. Um, I really like Amazon long term. I think they're setting up. I mean, if you think about who's what kind of companies stand to benefit the most from a future where like robots are able to do basic human labor, it's a company like Amazon that already has the logistics, already has the factories, already has the warehouses, already has all that stuff in place. It's like companies like Uber and Amazon stand to benefit enormously from that because it's like their biggest expense right now, low cost human labor. So if that can be if and when that gets replaced, um, that just goes basically straight to the bottom line. I feel like I'm right in the middle of being a bear bull. I want to move into the bull territory. What's your best bull or bear case for the next month, year, and 3 years? I mean, there you don't have to choose. Like that's what hedging is for. Um, I am bull. Maybe not the next. Maybe not 3 years out, but at least in the near to short term. 1 month, 1 year. Um, I think 1 month is probably, base case more volatility. 1 year, I'm definitely bullish on. I think the market is very good likelihood of being up in a year. 3 years, who if we have like a blow off top and a huge bull market rally, then it's like, okay, well then, maybe my opinion flips and I become bearish. It just depends on what happens between now and then. But you don't have to be on one side or the other. You can play both sides of the fence a little bit. Let's see. Quantum stock outlook. I don't like quantum stocks. I know they're popping today. I don't know why they're popping. I haven't looked at the news for them. Um, I have puts on multiple quantum computing stocks right now. I don't. I don't think it's. It doesn't look to me like there's anything that has a good probability of really making any money in the future. Um, I know they're popping today, but I am bearish on them. A lot of boomers still have millennial kids living at home, so they need the extra bedrooms still. Yes, that's a good point. Uh, we've got the highest number of I don't know whether it's millennials or if it's now moved down to Gen Z as well. But we've got the highest number or percentage of young people still living with their parents, and part of that is due to the fact that again, housing has become so unaffordable, and a lot of millennials saw their parents go through losing everything in the financial crisis. That they made 10,000, 20,000, 30,000 on their first house if they ever got in, and they thought it was another housing bubble, so they sold, and they've been waiting for a crash for the last 10 years, and now they're priced out and they can't afford to buy. And so if for a lot of boomers who cannot afford to help their kids purchase a home, a lot of boomers are instead just having their kids live with them. Um, so yeah, that is definitely happening. Come for the finances, stay for the anarchy rants. Yeah, yeah, I probably do too much of that. Um, Libertarians and anarcho-capitalists have the unique position of being hated by 80% of the population who are split between the left and the right. Um, but that's what a government is by definition. It's a monopoly on violence. Lost my place again. Where'd you guys go? Okay, there we are. Does our country really need more houses, or is it required to push speculator out of the housing market? Maybe by increasing gigantic tax on second or third houses. Whenever you try and solve a government created problem with more government, you end up creating way more problems. So the answer to the problem of scarce housing is not more government intervention to try and make it easier for certain people to get into housing. The answer is less government intervention so that we can have more housing. It's like, do we really need more houses? Like, well, would the world be better? Yeah. Abundance is always better than scarcity. Is the world better now that we have more food than less? Yes. Do we have problems with obese children? Yes. In fact, there are now today in the world more obese children than there are underweight from, you know, malnutrition. Is that a problem? Yes. Is that a better problem than children dying of starvation? Absolutely. Abundance is always better than scarcity. Um, and we don't get there by the government forcing it to happen. We get there by the government just getting out of the way, because then you have a built-in limitation um, on going too far, over allocating resources to one area, because then the price drops so much it's not profitable anymore. So those resources then get allocated somewhere else where they're needed more. So the free market has wonderful limitations on overabundance in one direction, because that's how it's called pricing. And it prevents misallocation of resources far better than regulations and laws do. All right, let's see. Not sure you're still watching Bloom Energy, but today was a great day. Took my profit. Yeah. What did it end at? Because the market just closed. I'm long Bloom Energy. So I am biased. Anytime you hear me tell you a position of mine, whether I'm long or short something, own calls or puts or shares or whatever, I'm not doing that because I think that I'm trying to tell you that I think you should do that. I'm just trying to share with you my bias. So if I say, "Oh yeah, I'm bullish on Bloom Energy," well, obviously I am. Otherwise, I wouldn't. I wouldn't have calls on Bloom Energy. But I want you to know that, because people's positions influence their opinions. Like that's the nature of taking a position in something, is because you have an opinion on it. So I'm just sharing that with you so that I'm that my the cognitive bias that comes through in my opinions about things. All right. Can you go into more detail on why you think deflation is more likely than hyperinflation despite government deleveraging their debt via inflation? I think the government and the central government, the central bank together in combination will do absolutely everything within their power to prevent deflation. And if we get close, um, they'll panic and they'll start printing more. This is something I'm probably going to have to make a deep dive YouTube video on this, but I've been really struggling with why people think that AI is so bad. Like, a lot of people are like scared of AI because they're going to be out of a job, and they think that AI and robots are going to take over all human production, and that there won't be any jobs, and that the people who control AI are going to be massively rich and everybody else is going to be in poverty. Um, and I've really been struggling with why that's such a widespread idea. It's not just uh, you know average individuals who think that. It's some very elite and smart and high up people. It's people like Andrew Yang and even Elon Musk saying, "Hey, yeah, we're going to have universal basic income at some point." It's like, the reason why I just realized this is because people have no concept of what a deflationary world looks like. And they don't realize that technology by nature is deflationary. And we've built a financial economy and world that is built on a foundation of inflation. And so technology and growth is directly at odds with a fiat monetary system that is reliant on inflation, reliant on numbers always going up. All technology is deflationary. That's what it's not even like a description. It's the same thing. When you have growth, you have deflation. It means you get more for less. We on this planet have the same resources we've always had throughout all of human history. We're not getting more resources from space. We get some asteroids ultimately, but And even when you talk about like solar energy, the same exact amount of solar energy leaves the world back out into space as hits the world every single day. There's not an accumulation of solar energy. Um, so we have the same amount of resources on this planet that we've always had, and yet we have infinitely more abundance and wealth. And when I talk about wealth, I mean the stuff that people want and need than we used to, and that's always been the case. When you talk about that being that being deflation, it means it costs you less to get that stuff than it used to. So, a couple thousand years ago, the cost of having food and shelter was sun up to sundown for your entire life, you toil, and maybe you don't die of starvation. That was the cost of food and shelter for most of human history. So, growth and technology and progress means we have the same inputs, but we have way more output. So things like steam engine and fossil fuels and tractors and the agricultural revolution, the industrial revolution, the information age, like all these things, they they exponentially increase our output in terms of the stuff that we produce, the stuff that people want and need, for the same amount of human input. In fact, a lot of times less human input. Like if you wanted to go back today and live at the standards of the 1950s or the 1940s, be very easy to do that on like a minimum wage job. Like if you wanted to have like no internet, no cell phone, live out in the boondocks and have to, have a little garden and like the scarcity that people lived on back then, it would cost very little now. The problem is most people want to keep up with the current modern standard of living. So then you're going to have to make more. And the reason why that continues to cost more in dollar terms is because it keep on debasing the dollar. And so when you have a new technology hit that is massively leveraged in terms of the output can go up for the same amount of input, which is what AI is. It's what the internet was. It's what the agricultural revolution did. It's what fossil fuels did. It's what railroads did. It's like whenever you have these big leaps in technology, it's like, okay, well, for the same input, we get a lot more output. That is deflation. That means things will cost less. The problem is we have a world that's built on inflation. And so we've got this technological deflation, which is real abundance and growth coming at odds with the inflationary world we live in. That means if the government doesn't outprint it, that means prices drop. And so initially, then there's pain and suffering from the fiat world collapsing. And ultimately, the world would be a lot better if we allowed that to happen. And eventually it does. These inflationary fiat regimes have happened throughout history. They're brief spikes in the long term. When I say brief spikes, I mean, it's a couple decades, 50 years, 100 years in the course of human history is really nothing. Even though that's sometimes people's entire lives. Either way, though, that's the thing. That's the reason why people are scared about AI is because we live thinking that inflation is the norm, but really progress is deflation. And so now we're having fast progress come at odds with the inflationary world that we have built around us. And one of those two is not going to win the battle. They can't both win. All right, let's see. Next question. $600 carpets. I didn't realize it was that cheap. So that's a comment in reference to the comment I made earlier about replacing the carpet in one of my rental properties. When you have rental properties, you're going to pretty much be replacing the carpet every single time a tenant moves out because they're not going to take care of them. So they're going to get very dirty. They're going to get stains. B, they're never going to get, even if you have nice carpet, you're never going to be able to clean it well enough for like the new tenant to look at it and think, oh yeah, this looks nice. Like I'd want to let my, kids crawl around on this carpet, and new carpet will look like that. And so, yeah, if you replace your carpet every single time with brand new, the cheapest carpet, and also it's a very small house, it's like 1,000 square feet. And so if you replace it every time, it's like that's a low cost way to to bring in somebody who's going to appreciate, a little bit more the nice carpets and if somebody if is willing to move into a place with really dirty carpets, it's like they're probably not going to take the best care of that property. Are you risk on right now? Yes, though slightly hedged. Um, do you believe in the importance of unions to create appropriate labor situations? Unions are an interesting one because historically, in American history, unions have used um, mafia style tactics to get what they want. We have a long history of very, very violent unions in order to force what they want. So there's nothing inherently wrong with a union. It's something that is um, like in an anarchist system, even like you would say, okay, yes, morally, property rights, unions are fantastic. The problem is with the way that unions have traditionally operated. And number one, that is historically with a lot of violence to force the changes that they want, which is essentially operating like a government does. The second thing is they wield law in their favor, which is then using the government's monopoly on violence to get what they want. So a lot of times unions, they go on strike. It's like now the company is legally not allowed to hire anybody to replace them. It's like, well, that is wrong because if everybody a part of the union goes on strike and they're all getting paid $30 an hour, I'm going to go to the company and say, hey, hire me for 20 because I want this job. Uh, why does anybody else have the right to stop me from doing that? Like, I'm willing to work for less. The company's willing to hire me for less, obviously. And so just because one person is refusing to work for less, ha- shouldn't they should not be able to prevent somebody else from working for less. That is immoral. And they use the government's monopoly on violence to prevent that in order to get what they want. So the way that unions operate today are bad, and that's why they drive businesses out of business. It's why the main reason why American car manufacturing went downhill, and you know around the world, cars are higher quality and lower cost, and so they tend to destroy the industries because they exploit it through force. Um, okay, next question. All right, so it looks like you guys think yes to the slow mode on chats because it helps the chat stay clean. So I'll continue to do that. Slow mode is worth only over 1,000 people. Yeah, there's only 300 people on right now. Um, but my goal is to get over 1,000. So maybe I should keep on doing it. I did not notice you had it on slow mode. Yeah, I don't think a lot of people do because most people are not actually trying to spam the comments. Um, man, I lost my spot, so I'm probably gonna be skipping some questions on accident because I lost the spot. Do residential REITs still make sense? I think yes, as long as you're using them for like just a placeholder to have exposure to real estate until you have enough to, put for a down payment on an actual property. Not just residential REITs, you can get exposure to that through like, home builders as well, things like that. Mm, is Google a buy? I'm long Google. I like Google. Buffett does too. He just bought recently. Housing is only inflated in US dollars, not so in priced in gold. That is true. And really nothing is in a bubble right now when you price it in gold, which means that it's probably not actually a bubble. Like when you look at stocks, when you look at real estate, when you look at Bitcoin, it's like compared to gold, none of these things are at or near all-time highs. They're very reasonably priced, um, which means it's really just, the purchasing power of the dollar is declining. Um, if everything's a bubble, nothing is, in the words of to make a play on the quote from The Incredibles. All right, let's see here. 26-year-old living with parents here. It's very demoralizing. Average house price in my county is 3 million after a 30-year mortgage. Never affording a home here. I need to leave eventually. Okay. Um, so Jacob, I'm going to tell you what I would do in your situation, because I've been in financial situations that were very demoralizing before. And so, I'm not claiming to understand exactly what you're feeling and what you're going through. But I've been in financial situations like when my wife and I first got married, we had to live in a part of town that, let's just say it was very, very high crime rate part of town. Um, the apartment was $650 a month. All of the utilities and everything like that were included. When we moved in, when we were moving in, there was a kid riding around in the parking lot on its tricycle with like a skull like painted on his face, and he's just like meat mugging us as he's on his tricycle. And we had a Satanist something like in the apartment next to us. Like we'd hear him like doing like seances and chants in the middle of the night through the wall. Like it was not the best place. And it was because we were we're just trying to get out of debt, and that was a demoralizing time. So uh, other than that as well, I've been in very demoralizing times. But if I were in your position, I would lean on moving into more discomfort where you have the ability to take control of some things. Um, I'm assuming that living with your parents is probably more comfortable than doing what I just described, moving to a different state or at least a different county or a different city, and a part of that city where you know you don't feel comfortable. Like when we went grocery shopping, we would drive 20, 30 minutes away to go somewhere where like, you know, where we felt where we felt more comfortable grocery shopping because the places around us were not great. Um, but at least then you are able to feel like you're picking up a little bit of that burden and that responsibility on your shoulders, which even if the life is more uncomfortable, there's more purpose and meaning in that. Um, you will probably also find that doing that frees up some of your other income because if the average house price in your county is $3 million. Oh, you said after a 30-year mortgage, so a million, 1.5 million. Um, I'm willing to bet that everything around there is expensive. So forcing yourself into discomfort will probably increase the delta between your income and your expenses and allow you to start moving up the wealth ladder. That's what I would do if I was in your situation, because both of them are going to be demoralizing financially, but one of them you're going to be making progress, and you won't have that nagging feeling in the back of your mind that is the most demoralizing, which is people are taking care of me instead of me being able to take care of myself. I think that's the worst feeling of all. All right, next question. Hmm. Drugs are the problem. The war on drugs made drugs a problem. The thing that happens when you arbitrarily declare certain substances okay as long as they go through legalized drug dealers like Pfizer. And then other substances are not okay. And we're going to kill anybody and arrest anybody who touches them or has them or sells them, means that um, all of the money for that stuff gets funneled to the absolute worst people on earth, and they become very rich and very powerful. So all the drug problems today are a direct result of the US's war on drugs for the last couple of decades. That's what has caused so many of the world's most evil, most powerful people to become so wealthy and so powerful. Um, it's not an issue with the drugs. Uh, Many of the drugs that come from the biggest pharma companies are more damaging and more addicting, but they're legal. And so um, you're not funneling money to terrorists and cartels. Um, and maybe the damage is just as bad doing it through legalized monopolies, these big pharma companies, in certain ways. But that's just an argument that we should have more freedom there, not less. Okay. Limitations on billionaires. Um, why why would you why would you assume that the line starts when the word switches to a B? So, like, what's the difference between somebody who has $900 million and $1 billion? Like, really, in terms of like the assets they can buy, the comforts and the luxuries they can afford, the impact they can have on the world, really no difference there. So you have to draw the line somewhere, right? If you're going to say that a certain wealth amount becomes immoral, you have to arbitrarily draw a line somewhere. So if you're going to draw a line somewhere, then you have to come up with a reasoning why you're drawing it there. And you're saying, okay, well, just because they're the richest. It's like, in what context are they the richest? Because globally, if you make over $50,000 a year, you're the richest. So on what moral basis do you have the right to say, oh, well, these artificial man-made borders mean that I don't count as the richest? And when you realize that you are richer than 99% of the population on Earth by a long shot, what most people then do is say, okay, well, it doesn't feel rich to me. So, in my opinion, the limitation on how rich you should be is just somebody who's richer than me. And that's why people like Elizabeth Warren, and maybe not AOC, because she actually does not have a lot of money. I think she just spends it all. But there's a lot of people in Congress, especially on the left, like Bernie Sanders, who are, very far left, talk about, evil billionaires, and they're worth tens or hundreds of millions of dollars themselves. But to a socialist and a communist, the rich is always richer than me. And they never think of themselves that way. And it's just, you just realize it's not, there's no compassion for the poor. It's all just envy about what the rich have, or people who are richer than them. I want billionaires like Bezos. I want successful people that make my life better. Um, there's two sides to this, in my opinion. Number one, you want the entrepreneur to have no limitation on the incentive to create. So if I can create products that, if I can create a product that is, costs $1, that is so attractive that a billion people want that from me, um, and they all pay me $1 for that product, then those people are way better off because they got something that they wanted more than the dollar that they gave up. And my reward for that is I get something I want, which is $1 billion. So we want an unlimited incentive on creating things that people want. The big problem is, which I think is, this is another thing that people sense the frustration that there's something wrong with this. They just don't know where to aim it. The big problem is when you have that large amount of money being made through force, through exploitation, through no choice. So this would be like pharmaceutical companies, a lot of financial industry, military contractors. Even a lot of like Amazon, a lot of Bezos' wealth came from like government contracts, and Microsoft as well. And so you have government taking money from people by force. That's what taxes are, and just handing it out through contracts to large companies. And so they are on the receiving end of this force and this exploitation. But it's not because of the Amazon Prime service. It's not because of it's not because of Netflix. It's not because of the products that individuals want to pay for. That's all. That's all great. We want the most incentives, the most riches to go to the people who create the most things that most people want. The big problem is when people get rich off it's called rent seeking, off the backs of the government pulling that money away from taxpayers and then handing it to somebody. And many times those people are the same people. I ran a poll recently on Twitter where I asked if people thought it was immoral to receive benefits from the government, even if you believe those benefits shouldn't exist. And I in the poll, I conflated, I listed out what I believed were government handouts. Government handout, by the way I'm defining it here is the government pays you money. So Social Security counts as that, Medicare counts as that, military contracts count as that, food stamps count as that, Section 8 rent counts as that. It's wherever the government decides to hand the money that they've taken from others. So my question was, do you think it's immoral to be on the receiving end of that? If you believe that it's wrong, the government does that. So a lot of people there would be no hypocrisy if somebody was like, I believe the government should pay for food stamps, and I believe that and I'm taking it. There's no moral hypocrisy there. That's like those two beliefs are aligned. But would you be a hypocrite if you said, okay, I don't think this Section 8 program should exist, but since it does, I'm going to buy a bunch of houses and enroll them in Section 8 and be, on the receiving end of this? And most people said it's not hypocritical because I've paid so much in taxes, I'm just getting back what I paid. And I think that's the wrong answer, because the reason why we're in the position that we're in systemically is because everybody has that outlook, which is just, I'm just going to get what's mine. I can't change the system, so I might as well be on the receiving end of it. It's like, well, that's the reason why we're in the situation we're in. That's the reasoning that every single person on the receiving end has, and that's why they're on the receiving end. If every person just actually did say, well, I'm not going to do it because I don't think it's right, even though I'm giving up something that I could have, then I mean, that's all it would take to change it. It would go away. Um, and so there's like the sense of like the world's not going to change if the individual doesn't. Um, and so it's the same thing with the billionaires who are getting these large government contracts. It's like, I'm sure in their mind they're thinking, well, the government's going to award this money to somebody. It might as well be me, and I've paid millions or hundreds of millions of dollars in taxes, so I'm just getting back what is rightfully mine. Um, and I think that attitude is the same all the way down to people on food stamps, and it's why we're in the situation we're in. If we outlawed foreigners from buying property or owning businesses in America, that would reduce the price of a house. Yep. So what you're saying is you think that individuals should be outlawed from selling their house to somebody who wants to buy it. Like if I own a house and I want to sell it and somebody's willing to pay me money for it, the government's going to come in and stop that. That's a violation of property rights. The government, a third party has no moral grounds to come in and tell me that a free market exchange cannot happen. I want to sell something, he wants to buy it. You're just going to make me sell it for less now. The issue is not foreigners. The issue is not boomers. The issue is government intervention. We need to get the government out of the way, and then we'll have abundance. You don't fix a government caused problem with more government. You fix it by getting the government out of the way. Okay. I'm going to do one more question here because we've been going for like a little over an hour now. and I still have to record some YouTube videos, so I don't want to blow my voice today. Um, okay, this is probably not going to be the last one, but uh, XE Fail said the libertarian viewpoints completely collapses with cronyism, fiat currency, and regulations used to stifle small competitors. That's like such a uh, logically incoherent statement, and I'm only calling you out on it because so many people believe this. They're like, oh well, the idea that you should get government out of the way collapses when you realize that the government is in the way. That's what I'm saying. The government should get out of the way. The cronyism is corporations using the government to forcefully get what they want. Without that government power, corporations would have to rely on voluntarism. It's like it, do you ever see the movie Thor, where in when he's unworthy of his power, Odin takes away his powers. Um, the solution to Thor being unworthy of wielding his hammer was not to make the hammer stronger and more powerful. That would give Thor more power. The solution was to remove that power and take it away from him. Um, and so the it's the same thing with the with the government and cronyism. Like cronyism is wielding the power of the government. If that power didn't exist, there'd be no power to wield. So it's just logically incoherent. All right, let's actually have. I'm going to look for one more question here. Um, I'm looking through the recent comments here, just finding one more question to end on. It's a chicken and egg logic. You're not going to stop these huge corporations without government interference, and then they can get out of the way. No, it's literally the laws and regulations that these large corporations get passed because it benefits them. When you have the FDA and the USDA and all of these organizations come in and enforce rules that only the largest corporations can figure out because they end up hiring these people after all of the laws are passed, bring them onto their board, and they're like, all right, fat paycheck, thanks for passing all those laws, help us do that, so all the little guys go out of business because they don't know how to navigate this complex legal system, and now we do because you're on our board. It's like the thing that you do to fix that is you repeal it all. You take it away. You just remove it. That stops the power of the large corporations by introducing competition, by allowing people to come in and create different products and better products at lower prices. It removes incumbency. It removes these legalized monopolies. And the free market sorts it out. And the large corporations that now cannot exist because they become reliant on using force can't force their product anymore. And so they die or they adapt and they actually become good again. So that is the way that you fix it. You don't fix it with more government regulation because who is the one who is pulling the strings? It's the elite, it's the rich, it's the corporations. So they're not going to get pulled against their own interests. The way you fix the system is just eliminating government power regulation laws, organizations, agencies, the bureaucracy. Um, All right. Everybody's talking about SoFi. If you're looking at the chart, everybody's saying it's collapsing after market. Ooh, it is. It's down 5%. What's going on? SoFi announces retirement of general counsel. Blockchain remittance push signals new growth phase. I don't know. Nothing. If I search Google, nothing coming up in the news. Oh, looks like they're just issuing new shares. That's why they're going down. Yeah, just some dilution. $1.5 billion worth of shares of its common stock. Or are they selling shares that they already had, or are they diluting? Either way, they're selling shares. They're going to use the net proceeds of the offering for general corporate purposes, including but not limited to enhancing their capital position, increasing optionality, and enabling further efficiency of capital management and funding incremental growth and business opportunities. I wonder if that means they're going to pay off debt. Do they have a lot of debt? Let's see. What's their debt position right now? Debt, they have $2.8 billion worth of debt, but doesn't seem like much. They already have $3.75 billion of cash and cash equivalents. So I think, yeah, they're probably not doing it to pay off debt. Well, either way, that's the reason why they're down. So, all righty. Well, thank you guys. Good questions today. Today's live stream definitely leaned a lot more towards the the anarchy rants. So, but it was fun. Appreciate the questions, and we'll see you guys again next time.